If someone asked you to point out the center of the digital economy, many will place their finger on Silicon Valley, populated by Apple, Google, Facebook, and too many sexy startups to count. Others may point at the area around Seattle, where Amazon and Microsoft are based. Few would point to a nondescript suburb of Eindhoven, the Netherlands' fifth biggest city. Yet, on closer inspection, the case for Veldhoven looks the most accurate. It is the hometown of ASML, the world's sole manufacturer of the most advanced chip-making machines. If chips make the world go round, ASML may be the cornerstone that the multi-trillion-dollar global tech industry has. How did ASML get to this point? And how did the US lose its leading position in the global chip market? In this video, I'll explain that the foundation of ASML was built way before the actual founding of the company in 1984, and show how its expansion developed opposite to the declining importance of the American chip makers. The early 1960s, the Philips Physics Labs is considered to be a super university where only the best of the best are welcome. Combined with unlimited budget for R&D, many technological innovations were born over here. At that time, Philips is one of the biggest companies in the Netherlands and well known worldwide for its products. It is in this period that in the US, in the form of the Pentagon and NASA, they are already investing billions in chips. The American military-industrial complex already knows the potential of chips for nearly a decade. The strong relationship between the military and the commercial companies proves to be very stimulating. In the end of the 1960s, Texas Instruments is granted an assignment by the Air Force to produce and process instruments for intensive care units in hospitals. The demand that these assignments are creating causes the Americans to master the chip production a lot faster than the Europeans. In Europe, the development is still limited to the physics labs of companies like Philips and Siemens. In the 1970s, the USA has expanded its leading position in the production of chips. At the same time, companies like IBM, Fairchild, Texas Instruments, and AT&T all try to develop smaller chips to keep the progress going. This is called Moore's Law. Moore's Law is the observation that the number of transistors in an integrated circuit doubles about every 2 years. It is this law which spurs every development in the entire chip industry. Every innovation is aimed at keeping Moore's Law alive. Next to the big companies, the US also has a thriving ecosystem of small innovative startup companies, which spurs the pace of the innovation even more. However, all the companies in the world are struggling in this period with lithographic innovation, a new method used to keep Moore's Law going. At Philips, the researchers are asking, is anyone still interested in our lithography knowledge? Only one guy was still interested, Wim Troost. He's willing to keep putting money in the highly loss-making activities of lithography within Philips. In the meantime, the US companies Perkin-Elmer and GCA have completely taken over the fast-growing lithography market. Philips sees the potential of lithography but wants to get rid of these activities. Therefore, they look for a partner to set up a separate joint venture for their lithography activities. Although they look in the US and Japan, they eventually partner up with a relatively small Dutch company called ASM, that stands for Advanced Semiconductor Materials. Although they look in the US and Japan, they eventually partner up with a relatively small Dutch company, Advanced Semiconductor Materials, also called ASM. Today, this company is known as ASMI and is smaller but just as successful on the stock market. It was also the first foreign company after World War II to be listed on the Nasdaq Stock Exchange in 1981. The owner, Arthur Del Prado of ASMI, had to lobby extensively for Philips to partner up with his company, because Philips considered him too small, even though the company is growing fast at that time. After long negotiations, the deal is done. A 50-50 division of shares between Philips and ASM, and the first office was going to be on the plant of Philips. The new company is called Advanced Semiconductor Lithography Materials, ASML. 1984. It is in this starting period that ASML develops revolutionary ways of running a company that will determine their success in the long term. In 1984, ASML wants to build a revolutionary chip-making machine, but their market share at that moment is exactly 0%. They don't have any income. Their only chance is to come up with a new machine in 2 years. That is the time when all their competitors will release the machines for the new generation of chips. Remember Moore's law? This time, the pressure forces ASML to completely rethink the traditional machine building way of development, prototype, testing, etc. To win time, ASML divides the development of the machine into different parts by separating their teams. After all the teams are done developing, they combine the different parts and everything has to work. In the 1980s, this was a truly revolutionary way of developing, not seen anywhere else. The leaders at ASML realize they are working with very intelligent scientists who love to innovate. So the leaders design a flat organization structure without hierarchy and a culture of empowerment. Taking initiative is rewarded and even deemed necessary. Today this may sound common, but in the early 1980s, with many big and bureaucratic companies dominating the market, this was not common at all. In the period when ASML is starting, their presence sends shockwaves to the chip industry. The Japanese chip producers are overtaking their American rivals. Companies like Nikon and Canon are producing faster chip machines with less errors compared to their American competitors, like GCA, Texas Instruments and Motorola. What caused this decline of American chip producers? They had been leading and dominating the markets for decades. A combination of factors can be seen as the cause when we look at the case of GCA. Vertical integration. Compared to American companies, Japanese companies have a strong degree of vertical integration, which means all the companies in the chip production chain cooperate closely together. This spurred innovation and improved the quality of the chip production machines. After all, the chip production technology is essential to achieve and maintain the leading position in the chip market. The Japanese companies simply delivered more quality than the Americans and thereby conquered market share rapidly. Financial backup. In the early 1980s, a worldwide recession is pushing investments down. The American chip companies invest less because they are mainly focused on profit and not necessarily innovation. In this recession, the Japanese continue to invest massively in innovative production ways for chips, which is essential to keep Moore's law going. This caused the Americans to be left behind in terms of automating and lowering the production cost per chip. Customer relations. Chip companies like GCA do not have a warm relationship with their chip machine suppliers. They prefer to fix the machines themselves, as where Canon and Nikon are closely working together to improve the quality of the machines. As a market leader, the American GCA was also not used to competition. Their service level was therefore poor, because everything was aimed at making profit as much and as fast as possible. Once the Japanese competition entered, they lost market share rapidly, while their innovation rate was lagging massively. Too much success. With hindsight, you might ask, why didn't they see this coming? After all, a good service is part of a successful company, right? But you have to remember that GCA was so successful in selling their machines in the late 70s that they were growing at an incredible rate. This huge success caused the company to battle at three fronts in the early 1980s. They had to manage and maintain their quick growth. Their customers were highly demanding chip producers who were always screaming for newer, better and more innovation. The lack of a properly maintained service level at their clients, as mentioned before. They had to keep innovating to stay in the rat race for innovations. The final wrong call. Due to their huge success of their first generation chip machine, the management of GCA makes a capital mistake in 1980. They start diversifying into other machines for the industry in order to expand outside the lithography market. This leads the organization to be divided over more than 40 R&D projects outside their core lithography business, leading to even poorer performance in the lithography business itself. At the same time that GCA is diversifying, Nikon keeps innovating and improving their chip machines from the design. This leads Nikon to have a structurally better machine in all of its aspects. The reputation of GCA declines fast and will never recover. Profit thinking versus nation thinking. Another factor that cannot be underestimated is the dedication of the entire Japanese industry in the 1980s. Analysts recall a strong sense of us feeling amongst the Japanese. This was not about making profit. The bigger goal was establishing a strategic position on the world stage by developing a strong semiconductor industry, and everyone was prepared to make big offers to achieve economic and political success. And making profit, it was actually at the bottom of their priority list. So, as I mentioned, in the late 1980s, the market is rough and a shakeout is taking place among the producers of lithography chip machines, while the Japanese companies Nikon and Canon together own 70% of the market. Everyone realizes that in the coming years, the shakeout will continue. In 1986, ASML is still a newcomer in the chip machine market with a turnover of barely $12 million. They will have to increase their customer base quickly to survive. Bankruptcy. The recession in the 1980s causes a deep dive in the demand for chip machines. Just at this moment, ASML is entering the market. This leads to a situation where ASML is still making huge losses at the end of 1988, but also the parent companies, Philips and ASM, are piling up losses. Especially for the smaller ASM, the joint venture of ASML is bringing the company close to bankruptcy. They have invested already $60 million, but in the spring of 1988, ASML cannot pay the salaries anymore. ASM is desperately trying to participate in ASML, but they don't succeed. The ASML participation is threatening to cause the bankruptcy of the mother company of ASM. The founder of ASM must make a hard choice and sell its participation in ASML to Philips without a sum. ASM has lost its investment of $30 million, while Philips keeps putting money to keep ASML afloat. In 1987, a new company is found, the Taiwan Semiconductor Manufacturing Company. TSMC is a so-called foundry. They do not design chips, they solely produce in assignment for other companies. During its founding, Philips receives 27.5% of the shares because of the chip technology that they bring. Considering that ASML is now fully owned by Philips, TSMC seems an easy catch. However, at that moment, ASML experiences the attitude of TSMC, who expect free service. They don't want maintenance contracts. This was completely new for ASML's people. After delivering the first machines to TSMC, they immediately put in a new order. Their factory has been burned and they need new machines quickly. In 1989, the biggest customer of ASML is the insurance company of TSMC. Nevertheless, slowly things seem to brighten up for ASML. So, ASML is cash flow positive and growing in 1990. However, they still don't have a really big customer. Their customers are smaller semiconductor companies like AMD, Micron and TSMC. Strangely, this causes ASML to get a technological lead to their competitors. It's these small companies that force ASML to focus on cost efficiency and performance. This leads to qualitatively superior machines sold by ASML with the term value of ownership. Simply put, ASML machines are 25% more expensive than its competitors, but due to their quality, they produce better and more chips. Consequently, the cost per chips is made lower with ASML machines, which causes the semiconductor producers like TSMC to make higher margin. Then it basically becomes a no-brainer to get the ASML machines. In 1995, ASML gets listed on the stock exchange in the Netherlands in order to become one of the most valuable companies of the world, reflected in a share price rise of a whopping 29,000%. In the years after 1995, ASML further develops the unique ecosystem of suppliers and knowledge institutions. This ecosystem is a crucial factor contributing to the dominance ASML has and will have in the current chip market. Now you may be wondering, how exactly does ASML make their machines so that they produce more chips at a higher quality? For that, click on this video to see how ASML developed their systems to produce machines.